Good morning. All right, hey, let's get on with it. Guten Morgen. How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm the founder of Traders.com. You might also know me from Investor Bootcamp or FX Bootcamp, going back 20 years. Quite a while ago, I wrote a book called Strategic and Tactical Forex Trading. That's what the book looks like. And guess what? It's still valid. Yes, everything in there, fundamentals and technicals. Actually, there's a whole bunch on how to keep a trade journal. 1/3 of it is trade journaling properly, because most people don't journal, and the ones that do don't do it right. So anyways, check that out. 2016 Forex Speaker of the Year at fxstreet.com. I'm the CEO of Peerless ETFs. Our ETF is the Wheel, available on the New York Stock Exchange. I manage charitable endowments. I have a bachelor's degree in macroeconomics from Harvard, etc., etc., etc. Also sat on a board of directors with George Soros. I worked at NASA, Apple Computers, Cisco Systems. Yeah, do tons of nonprofit work all the time. Jim, actually, yes. So Jim brings up, we're trying something new today. And let me get that for you. Yes, I think it's going to work. I need to sort of duct tape things together. Again, we tried something new at TRADARS this morning. Let's see how I do this. Is that the right spot? No. Let's see. All right. All right, cool. So there is a place. I'll have to, I think this will be the link that I will duct tape together in the process. But Jim, for those that were in today's recording or live stream, you get here. Okay, cool. All right, so you come to this page. Again, if you have access to the Fundamental Analytics tool, this is where you go for the live webinars. Okay. And this is where you go for the recordings, and here's today's recording. And hopefully it's higher resolution. So guten Morgen. Let me remind you that trading is risky, not appropriate. The microphone sucks. So I had this built in my pack 100 times because we used to do a lot of business. Switzerland wants the Swiss franc to be weak is so I think it's better. The Europeans that surround Switzerland. I like the fact that it doesn't put my big face at the bottom. Swiss products and services. Cool. So if Euro's going to weaken, 1080p, baby. Switzerland needs the Swiss franc to weaken further. Bit of extra work to do, but it looks like we solved a challenge. If you got a problem, I'll solve it. Check out my hook while my DJ revolves it. Cool. So, yeah, I think that's going to work. Neat. So anyways, there you go. So guess what? We got some pretty cool changes coming to traders.com to make it more affordable and to offer new value. So what do you think? More value and more affordability? Is that a good combo? Yeah. So I should be rolling something out by the second quarter. Maybe sooner. So anyways, we have analytical tools, fundamentally and technically. We have market tools. We have coaching courses and community. What you also need is execution. Okay? And so for that, I recommend getting yourself tradersway.com as your broker. Yep, very cool. They're good people. They're ethical. They have an ethical business model. They're faster than the big firms. Traders Way is a boutique firm. But that means for you, that's a good thing. Why? Why is a smaller boutique firm better than a big firm? Well, the big firms are rarely ECNs, so they make money by you losing money. But also, because they're in it for the money, they stuff tens of thousands of traders on the one server. Well, what if it was thousands instead of tens of thousands? It's just going to be faster. I mean, it just makes sense, doesn't it? Because it's executing less trades at once. Imagine pulling the trigger and 900 people pulled the trigger right around the same time. It's going to be slower. We call that slippage. You're going to have slippage. Well, many years ago, and I forget what service I used, but I did pull the numbers on execution speed, and it was one of the fastest. Yes. So, fast means better price. Better price, well, is a good thing. So anyways, TRADARS and Traders Way, a marriage made in heaven? Well, whatever's close to heaven. You imagine, you're like, wait, God made this relationship? Well, okay, maybe that's an exaggeration, but it's very good. Very good. Okay, so some of the things I'm working on is, can I give you more value? That's good. Can I make it more affordable? That's good. What if you also had some funding, like a prop fund? What if traders had a prop fund built into it? Ooh. Yeah. What if you could trade under your own rules? Oh. What if you got to keep 100% of the profits? Could be interesting. I'm not saying, I'm just saying, wouldn't that be dreamy? Yeah, wouldn't that be dreamy? Yeah, I'm not saying, I'm just saying. Yeah. So anyways, cool, right? There's the disclaimer again. So what's going on in the market? Nah, it's kind of quiet. I can tell you this was a -3. So it's going cold. Now, I've already done all of this, so I'm not going to do a deep dive. You should already know this stuff. Again, if you're showing up right before the stock market open and you don't know where the market sits as far as sentiment and all that, you're way behind. Richard says 100% of the profits is a pretty good deal. Well, you're a hard negotiator, Richard. Spencer always gets a good deal. We got meeting minutes today. That's worthy of a read. Make sure you read it. It really tells you where the Fed is sitting. The most important thing is not today. The most important thing is tomorrow. So a lot of the news on the calendar right now is just sort of blah. Maybe it produces volatility, probably not. But if it did, there's no reliable, repeatable pattern. Okay? Okay? Well, Richard says, can we get AI to read and all that? Oh, you mean it? That? Yeah. Yeah. The answer to that is yes. So I could build that for you, Richard, and put it in the basic level of membership at TRADARS. So I'm thinking, for example, this whole tab will be available to all members of tradars.com and not just the more elite members. That was one of my thoughts this morning in my meditation. And I will add this as well. So this would be available to everybody. And this is basically what you're talking about, but you want it to not just read articles on dozens and dozens of websites to tell you about how the market is feeling about pound yen. You're like, well, can it read the FOMC meeting minutes? Yeah, I wouldn't be able to put it here, but I do have some ideas, and we already have worked out a lot of it. We just haven't fully finished that project and put it into motion. Like it's ready to finish. Okay. But for everybody here, this is actually reading articles. Okay. This is reading articles. So like pound dollar, how does the market feel about pound dollar? Okay. Well, let's take a look. It has read 54 articles this week in the last 7 days on 4 different websites. Okay? So it's all recent stuff. And if you read these articles, there's a pretty favorable sentiment in the articles about buying pound dollar. And you can see recently, because this is over the last 30 days, this is over the last 7 days. The 7-day score has gone from negative to positive. The articles being written right now favor buying pound dollar. Isn't that cool? And you can go back 60 days and see the change in score. You can go back 90 days. Okay. So my thought was, well, first of all, I have to add this to this navigation bar And I was thinking about putting that as a benefit for all members of Traders.com. Is that a good idea? And that would include the scalping radar. That's my thought anyways. So give me 75%. Okay? Yeah. But I would also have to add the headline news radar. So I would add this too for everybody. So now this is not reading articles, it's just collecting headlines that are coming out in real time and then reading them to you while you trade. So in 4 hours and 29 minutes, it's reminding you that we have FOMC meeting minutes to come out. And so you have this running in the background behind your charts, and you hear stuff like this.
U.S. dollar has small uptick with U.S. tariffs expanding in scope by April.
Fed minutes to offer clues on slower rate cuts outlook in 2025. Silver price forecast. Silver U.S. dollar recovers intraday losses amid caution on Trump's tariff threats. Okay? Nice, right? So it's going to dozens of websites pulling headline news that's relevant to you. So I thought I'd include that too. So this is where I'm at right now. So hopefully you're like, man, this is awesome. Yeah. So anyways, and on top of that, you have the implied volatility radar. So there's going to be a whole bunch of stuff, right? Yeah. So, yeah. Oh, yeah. All right, so let's move on.com. How's the stock market going to do? Dow, weakness with an opportunity. Nikkei, weakness with an opportunity. Dow on a 30-minute, weakness with an opportunity. Nikkei on a 30-minute, bearish, right? With an opportunity. NASDAQ, that's strength, but that's a threat. So right now, somewhere around 22,000, you would look to buy a dip if you were a bull. You should be a bull because, well, on this time frame, the 4 hour, NASDAQ's still bullish. So you're probably thinking of buying down there where the arrow. So the arrow isn't a target. It's not a prediction. It's saying if this pattern continues, and it's a bullish pattern, right? Now, if you don't know that it's a bullish pattern or if this is bullish or not, in the description under this video, there's a link to a free download so that you can download flashcards to train yourself about pattern recognition. I think there's 20 different patterns and how to trade them. The idea is you download it, you print it, you cut them out, and now you have flashcards. Yeah, cool. Is it a big sales pitch to get you to buy or subscribe to Traders.com? No. There's no follow-up sequence. I don't think so. I made it quite a while ago. I did it at a Starbucks. So I think it just sends you an email with the download link. That's it. So it's just free, okay? But you should probably put this on your to-do list. If you're a bull, this is what this means. Oh, let it fall to around 21,972. And then there on your charts, you would go and confirm this or deny this and see if you have opportunities to buy a dip in an uptrend. So it's not a signal. It's just doing some technical analysis for you. So you put this on your, hey, maybe I'll buy a dip later watch list. Okay? So these are technical pattern watch lists. Now, daily, okay, this says something different. Well, it's a different time frame. So do you know what this pattern means? If you don't, download the flashcards. So, for example, if you were a bull on a daily, okay, we have it going up to 22.5. You probably want to catch a dip and take it north on, I'll do it in yellow, a roll reversal. Just standard technical analysis. But many amateur traders, they don't really know how to do standard technical analysis. They either didn't train, or really the gurus that train them are just wrong. They just really don't know how to do it properly. So it's not your fault. Mahai, even though I know Soros, I have not read his book. I know a little bit of reflexivity and the concepts behind it. But yeah, anyways. Of course, when I sat on the board of directors with him, that was 1995. Some water has gone under the bridge, huh? Under the bridge downtown, that's where I drew some blood. Well, it's much longer term. Okay, much longer term. As far as day trading, scalping, and even swing trading, not much. It's more about, reading the market. My background sucks today, Wayne, but what do you mean? I don't even know what that means. Let me know, and I'll improve my background. Okay? Cool. So I've already done some analysis earlier today. So if you're not a member, you're not going to benefit. I'm going to get rid of all of that. Too bad, so sad. All right. So let's go through hundreds and hundreds and hundreds of charts. Now, I'm only looking for trends. Okay? I'm only going to look for trends. And then on top of this, you should filter by your fundamental bias. What is your fundamental bias? Well, you develop that over in the fundamental analytics tool. But let's just do technicals. Okay. And we're going to do all pairs. Remember, we're only looking for trends. I got rid of Gartley patterns and trading back towards resistance or, down to support, all that kind of stuff. That's kind of like skippy scalpy stuff, which is fine, but I don't want to do that right now. I'm not looking for reversals. Okay, but you could add them through, by reversals, what I mean is harmonic patterns. So you get things like Gartleys and bats and all kinds of stuff. All right. So first thing you want to do is look at the time frame, and the second thing is a currency pair, right? So you'll see some overlaps, but just because it's bearish on a 30-minute doesn't mean it necessarily is bearish on a 15, although in this case it is. But what if it's not bearish? Is it bearish or bullish on a daily. Well, it might be different. You might be short-term short, but long-term long. So you trade the dip today and then you buy the dip tomorrow. Maybe, right? Could be. That's so. Again, these are just patterns, and in fact, these are only trend patterns. Okay, and sometimes the trend pattern is sideways. Well, that's important information too. All right, 3, 2, 1, weakness with an opportunity, 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 weakness with a threat, weakness with an opportunity, weakness with an opportunity, weakness with a threat. Non-directional. Okay, this is bullish with a threat. This is non-directional, non-directional. I'm going to call it non-directional. This is bullish with a threat. This is weakness with a threat. This is weakness with an opportunity. This is, I will say weakness with an opportunity after a pullback. This is non-directional. Boom. I've just done dozens and dozens and dozens because all the other charts that we didn't look at didn't have trending patterns. All right. Euro dollar. Bearish, it was an opportunity, but you've already missed it. Inverse head and shoulders. Ooh, that could be interesting. Well, that would be an opportunity for a reversal on the 4-hour Kiwi yen. Interesting. Okay, 4-hour Kiwi dollar, bullish with an opportunity. USD yen 4-hour bearish with a slight opportunity. Aussie CAD, bullish with an opportunity. Pound yen 4-hour chart non-directional, sideways. CAD Swissy, bullish with an opportunity. Kiwi CAD on a 4-hour, sideways. Triangle breakout, well, still sideways on the Euro Swissy 4-hour. Pound CAD daily, sideways. Euro Aussie daily is bearish with an opportunity. Euro dollar daily, it is sideways, but maybe an up, a down, and buy a dip in the next week. So that might be a swing next week. Euro Kiwi, bullish with an opportunity. USD Swiss franc Japanese yen, bearish with a threat. Kiwi, you get it? Like I'm just burning through hundreds of charts. And from this, you should be writing things down. What look like opportunities to you? If it's sideways, it's not an opportunity. Let it break out, catch the pullback. That's called a trap and break. If it's a threat, pass. So many of these were opportunities, but several, right? But many were threats. Many were sideways. So what you do now is you whittle it down and you just look at the opportunity stuff. In particular, you can filter it further with your fundamental bias. And so you might only have 5 things to look at now, and then you go find those 5 things on your charts and see if you like the opportunity or not. Because it might be an opportunity to sell Euro Aussie, for example. Okay? But you might not like the fact that you're already at target for the month. So you're like, well, the pattern might be bearish, but this is a take profit zone, so you pass. Or you say to yourself, well, I think we're going to get to the next level, maybe even S3. So S2 and S3 might be your targets. Okay, well, if Euro Aussie gave you, an opportunity, this might be your next trade plan. You still have to do your job. But the thing is, you stop wasting your time looking at the wrong thing at the wrong time. Okay? Hey, but yeah, Sky Killer says New Zealand cut interest rates by 50 basis points. Yep, we already knew that. We knew that was coming. We've had it plotted for a while. It's in our fundamentals section. So you go to fundamentals, you go to central banks. Okay, and you can pull up the data. Very nice. Okay, cool. So 4.25 to 3.75 in the first quarter. Oh, yeah. There it is. Okay. By the time we get to the second quarter, they're going to cut one more time, but 25 basis points, not by 50. So Sky Killer, you already know that. Then they're going to pause, and then at the end of the year, they'll cut one more time to 3.25. And we have it plotted here where they're going to cut more than all the other central banks, right? Comparatively. Okay, the UK is also going to cut quite aggressively. They're going to cut one more time than Canada, the Eurozone, and the Fed. Now, as we get new SEPs, this could come off. This can change. And you can see Japan is raising interest rates, and Switzerland's going to cut one more time in the future. Oh, but we already know that. Where do we get this data? From the central banks. So looking at New Zealand, we already knew. So it was 4.25. We knew that. They had already told us, because this has been plotted for many months, that in the first quarter they were going to cut by 50 basis points, which they did. So all I'm saying is we knew that a long time ago. So Kiwi's been weak, and now you're looking at it and it seems to be strong. Yeah, well, you sell the rumor, you buy the news. It's profit taking by bears. Now, we should be able to see that in a week or two on our Commitment of Traders report, where you look at New Zealand dollar. 84.37% of the market is short. Why? Everybody on the planet knew they were cutting. But in a week or two, we'll see. Why did the Kiwi gain strength? Well, if we see significantly less bears, which I would suspect is the case, what it means is bears took profit and got out. And if the trend continues, which it likely would, we would have this data here to show that even though you want to do this against dollar, I guess, or yen, NZD, Euro Kiwi. I mean, we have all the data. I'll pull up this one because it's obscure. You'll see that even though Kiwi is strong, or looks strong, or is strong now, it's either technical profit taking, fundamental profit taking, but you'll be able to see it here. So Euro is green, Kiwi is red. So you can see the market is absolutely bearish on Kiwi, but week over week is less bearish. Less bearish means, in this case, most likely less bears. Why? Bears bought, which is profit taking. And in the near future, if this trend continues, then shorting the Kiwi in the future is probable. So you end up then selling the rally. Dude, right? Impressive, huh? Yeah, or you can just guess. Whatever floats your boat. If you prefer to guess, then by all means, huh? Oh, seasonality? Yeah, we can check that out. That's a fundamental thing. So you go to seasonality, and if we do monthly, right, let's do here. What pair do you want for Kiwi? Dollar, yen, Swissy? Okay, I'll just pick one. Or do you want to go back to the Euro Kiwi? Let's go back to the Euro Kiwi because I don't really trade Euro Kiwi, so I don't know. All right, so typically it's slightly bullish in January, and then usually there's a drop. Now, the last 5 years, February has been good to Euro Kiwi. But typically, because you go from here to here, okay, again, going back 20 years, wow, it's quite different from what's happened over the last 5 years. Is that your Brexit stuff? Yeah, maybe. But let's take a look at it week by week. Typically, you can see there's upward movement and then a collapse around week 6. Okay, you let it fall you top out week 6, so you let it fall week 7. And around week 8, you buy it back. Around week 12, you take profit. Okay? Week 20, you probably look for selling. Okay? Confirmed with your charts, of course. And then again, week 32, 33, 34, 35 tends to be a topish point. So really, this is probably the best time of year now here where you go, oops. All right. So really the best time of year is probably week 35. You look to sell and you hold for 10 weeks to the downside. So that's either Euro weakness or Kiwi strength. So what week are we in now? Okay, so somewhere around 8. Oops, somewhere around 8. So week 8 is right here. So Euro Kiwi is typically, okay, showing Kiwi strength or Euro weakness. So typically down. And then what has happened in the past, which does not predict future results, it generally bounces and becomes generally okay for a month. Okay. Now this is only 10 years. Okay. This is only 10 years of analysis. Up here is 5 years and 20 years, just so you know. Cool. Okay. So here's the down and then the up and then the down sideways. And then remember week 35, 38, week 40, typically is very bullish Euro Kiwi, and then it just drops. But that's why I calculated it with 2 standard deviations. So oversold, overbought, oversold. And that gets translated to okay? Yeah. What we see here is what's actually happened so far this year. It's unusually bearish. Okay. In particular, when you look at the last 5 years, it's slightly bullish to very bullish, and then it fizzles this way. Okay? And so what we've had now is, okay, but maybe we start to follow the green bars instead of the red bars. I don't know the future. It has a lot to do, like, why is the last 5 years so different from the last 20 years? Well, that would be current ECB policy, right? Or current RBNZ policy. These things change over time. Yeah. But you want to find, right? You want to find the, well, let's do this in red. Let's do this in red first. You want to find the general themes. Okay? And ideally, you're lining them up. Okay? You see? What do you think? Is this good information? Okay. Right now, when you do macroeconomic analysis of both Europe and New Zealand, okay, up, up, down, 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 up. Lots of neutrality. So you're like, okay, it has a negative score. It's neutral, but you can sell it, in particular if your technicals and your seasonality line up. And seasonality is a little bit up. But it looks here like it's falling. So you could probably find something better to do than trade this pair now. Okay? Yeah. But notice seasonally, the next move is up. Technically, it's bearish. So you could wait for this technical to turn green and then try to trade the seasonality. Okay? So this, just because the score is negative doesn't mean there's no trade. It means you should wait for the technical trend reading to not be negative. See, it has a negative integer. Okay, the rise over the run is a negative integer. So statistically, this is bearish. Seasonally, it's usually bullish. Do you want to trade against those two things? No. But in the future, if this does something like that, this here will turn from -2 to -1 to 0 to +1. So if you have a +1 here and a +1 here, even if your absolute score between the two economies is not bullish, you can trade it. Okay? So here's your seasonality. Usually it drifts somewhere around here, which we've already identified as week 8. In the past, it's turned north. So now you say, well, I want this trade. But is it happening yet? No. So you wait for this to turn positive. Oh my God. Guessing seems stupid, doesn't it? Hang on, my phone's on fire. Everybody wants the Wayne. No, everybody wants Wayne to pay the bills. All right, well, that sucks. All right. You guys loving this? This is crazy detailed, right? Right? Crazy detailed. And then we get a question about euro dollar. Really? All right. Neutral. What's your thought? Well, seasonally it's usually bearish, but it's rising. So do we have congruency between fundamentals and technicals? No. What do I think? What is my analysis? There it is. This is my brain. There it is. That's my analysis. Okay? So Europe beat their GDP expectations. United States missed their GDP expectations. That favors euro. Inflation in Europe got better. That's good for Europe. Inflation is higher than expected in the United States. That's bad. Okay? NFP produced more jobs than expected. That's good for dollar. Okay, Europe. Okay, here's your unemployment levels. COT positioning. Market is 58% short euro, so that brings euro dollar down. The market is net long US dollar. It's a 70-30 split for bulls, so 70% of the institutional market is buying dollars. Cool. Wow. Nice. Market's open, so let's do some implied volatility. Well, actually, let me get back here. Let's go back to news. Check it out. Nothing on the calendar right now produces volatility with reliable, repeatable patterns until tomorrow night. And then nothing until Friday morning. And that's it for the week. Do retail sales out of the UK. Okay, if less than expected, if greater than expected. And there hasn't been a time with a reliable, repeatable pattern if it comes out as expected. So you want to look for a miss or a beat. Now you can do some analysis and try to guess, right, or predict based on the trend of misses and beats and say, well, I think they're going to beat or I think they're going to miss, because you do some Googling and you find the trend. So if the UK retail sales comes out less than projected, there's no scalp on pound dollar. Oh, you would expect there would be, but there isn't. Something will likely happen, but it's not reliable and repeatable. Now, in the case that the number comes out greater than expected, there's still no scalp on pound dollar. Is that good to know? That's up to you, my friend. Do you want to know this information? Okay, well, we have all this information. You can just summarize it this way. If it's less, high probability of up. If this is greater, high probability of down, but no scalp. Yeah, cool, right? Oh my God, if you're trading without this stuff, you're blind, baby, blind. Now, here we go. So, Kiwi weakness. That's my play. I'm a bear on Kiwi. I explained this hours ago. Yeah. There's Kiwi coming down. We also identified at 7 o'clock in the morning. By the way, it's 10 o'clock in the morning. So 3 hours ago, we already identified some yen strength. Okay, that's good. We already talked about Kiwi weakness. Okay, that's fine. And this is what's happening right now. See? That's the time. Cool. What else are you trading? Aussie? Yeah. Or do you like Ripple? Okay. what does Ripple look like? Let's say you're a bull on Ripple. Okay. Down to the implied low, up to the implied high. The low is likely to happen in the next few hours. The high is likely to happen tomorrow. You like gold? Okay, we just kicked off the implied 4-hour low. Wait, what? So if you were a bull on gold, and that's up to you, I don't know. Okay, based on what gold does on Wednesdays this time of day, this is the implied Wednesday low, or 4-hour low, right? So, and then this is the Wednesday 1-hour low. So if you're a bull, do you buy this? Yep. If you're a bull, do you buy this? Yep. Okay. First targets are up there. Longer term is even higher. I have to zoom out, I guess. Ooh, 500%, yeah. All right. So if you're a gold bug, okay, this is your day trade. Okay, this is your market open trades. There's London Open. Well, actually, that's still a swing, right? So there's your sort of day trade, swing trade. Let me redo the green one. Okay. And now your New York market open trade for gold is this. And you should be able to ride this up to the daily target for tomorrow. Isn't that nice? Then you say, well, Wayne, what if you're wrong? Well, I'm not wrong. That is the volatility number. Well, how do I know it's going to go up? Well, that's your fundamental bias. You did research. Right? So, well, what if it doesn't go up? Well, your stop loss is likely to be hit. Where's your stop loss going to be? I recommend it be below the 4-hour or below the daily, depending on your time frame, so that you can get one of these things if you're a bull. But if you're a bull, but you're worried about it falling, do you still want to be long in a pattern like this? Heck no. So that's why your stop's going to be taking you out. So this tool here is very helpful with stop loss placement and timing of your entries. So when you're trading gold, should you be trading gold now? No, we're losing volume and volatility. You're hours late. You should be in here placing your trades. Look, there's the early move that we had. Then it dipped. And then here's the big move that we have. And now we're losing volume and volatility like crazy as Europeans leave the market. So volatility increases here, volatility increases here, volatility increases here. Those are the 3 times of day. If you're a scalper, okay, you buy here, you exit. If you're a scalper, you buy here and you exit. If you're a scalper, you buy here and you exit. If you're a swing trader or position trader, you're trying to look further out into the direction of the overall trend. So even though volume and volatility comes and goes, you'd like to catch that fundamental or technical trend. What? Okay. Seems like Monday's a great trade, a great day, I should say. The market open is a great time to put in your swing trade. Monday is the best day for gold. Tuesday is usually a cool day. Wednesday is all right, so Wednesday, Thursday. And then Friday is a terrible day for trading gold. So you can see A swing trade here is great. A day trade here is great. A day trade here is okay. The swing should be able to catch you direction. So even though we lose volume and volatility, is it going to make a lower low? Probably not. So you get the big move, you get a secondary move, then it fizzles, and then a new Monday market open, which for me is Sunday night. That's the, right? That's the next move here as volume comes in. That just happened. Oh no!